Jeremy Grantham is probably the most experienced investor in the world. The only one who predicted the collapse of the economy in 2008, due to which he often puts a crown on his head, but not in this case. Now he has predicted another economic crisis and a fall in the stock market by at least half. Sit back and enjoy the video, and don't forget to subscribe to my YouTube channel. Grantham published an article titled, "Let the Wild Excitement Begin," in which he opined that the bubble in the S&P 500 index should have burst quickly. The index has barely changed since then, however, it still sticks to its prediction, claiming that it has seen larger-scale rallies develop after the bubble announcement. As an example, he cites 1998, when he warned about the dot-com bubble. Despite the record estimates, the S&P 500 rose another 50% after its forecast. Grantham recommends significantly reducing investments in stocks. He expressed the opinion that he expects the S&P 500 index to decline at least to the level of 3,200, and in the case of a more serious recession to 2,200. At current S&P 500 levels around 4,800, a decline to 3,200 represents more than a 30% loss, while a drop to 2,200 means the market has lost 54% of its value. According to Grantham, this also implies that stocks become doomed for many years, with low average returns. Along with the high estimates, Grantham noted that investor sentiment and the state of the economy are not yet weak enough for sustained long-term bull market growth. He stressed that a real bull market requires conditions similar to those in 2009, including high unemployment, deep pessimism and low prices. However, none of these conditions currently exist. In general, when analyzing other major bubbles, such as in 1929, 2000, perhaps in 1972-74, and the housing bubble, one can notice that in each case people were overly optimistic, which, according to Grantham, resembles attention deficit disorder. Currently, Grantham and Hassman's stock forecasts go beyond the consensus on Wall Street. The lowest target price for the end of 2024 among large companies belongs to JP Morgan and is 4,200, which implies a decrease of 9% compared to current levels. The most optimistic target presented by BMO Capital Markets assumes an index growth of 10%. At the same time, Grantham notes that the list of recession signals continues to increase in the economy. Both the Treasury yield curve and the Conference Board's leading economic index, two indicators with an impeccable track record in previous recessions over the past few decades, point to an impending recession. Where is Jeremy Grantham investing? Given his long-term outlook for U.S. stocks, Grantham noted that, given the choice, he would prefer to avoid them. He also expressed surprise at the relative reasonableness of stock markets outside the United States. For investors who are limited by the choice in favor of the United States, Grantham identified 4 areas in which, in his opinion, there are stable long-term growth trends: natural resources, companies related to the climate crisis, valuable stocks and high-quality stocks. Jeremy Grantham never ceases to remind us about the stress of the financial system and the entire economy of the stock market. Stocks are not the only assets that have undergone overvaluation when the available money has encouraged investors to take more risks. Prices for government bonds, real estate and even cryptocurrencies have also increased significantly. According to Grantham, this universal abundance can lead to particularly harsh consequences. The recent collapse of the Silicon Valley Bank, for example, was partly caused by bond losses as interest rates soared and U.S. government bond prices declined. As the bubble bursts, it will almost certainly lead to an economic downturn, he predicted. It would be difficult to predict the occurrence of the collapse of the Silicon Valley Bank or the need for the intervention of the Swiss government and an emergency rescue of Credit Suisse, he explained. When big bubbles burst, they put significant pressure on the system, Grantham said. It's like the pressure behind a dam. It is very difficult to predict which part will fail. Grantham predicts that the correction in the bond market may be almost complete. Consequently, the tension in the financial system may increase when, according to his expectations, the U.S. economy enters a recession and company revenues begin to decline. Federal Reserve economists predict a moderate recession at the end of 2024 due to the effects of the banking crisis. Grantham blamed central banks for the latest market bubble in the United States. Over the past decades, they have pursued policies that artificially increased the value of financial assets, setting the stage for subsequent collapses, he said. Every chairman of the Federal Reserve System, starting with Alan Greenspan, who headed the U.S. Central Bank from 1987 to 2006, has followed the same policy, believing that lower interest rates are a boon, he noted. But what were the results? This led to a series of large bubbles, which then burst, causing a lot of suffering. Grantham believes that Jerome Powell, the current chairman of the Fed, would be wise to follow the example of his predecessor Paul Volcker. Volcker raised interest rates to unprecedented levels in the late 1970s and early 1980s to combat inflation. He managed to keep prices from rising, although his policies also led to a series of recessions. According to Grantham, if Powell could follow at least a little into Volcker's footsteps, it would be a significant improvement. He suggests that the Fed should continue to raise interest rates instead of cutting them prematurely. The U.S. consumer inflation rate fell to 5% in March, which is the lowest since May 2021. This has caused speculation among investors about a possible end to the increase in the cost of loans from the Fed. However, Grantham points to long-term trends that can support inflation for a long time. Climate change leads to extreme weather conditions and frequent natural disasters, which leads to disruptions in the supply of goods and an increase in food prices. Also, the aging of the population poses a risk, since a decrease in the number of working people requires an increase in wages. Grantham emphasizes that these are not strong influences, but very clear and important factors. What will cause the economy to collapse? Economic downturn due to the global recession. The global economic recession can significantly affect the economies of various countries, which will lead to collapse in 2024. Excessive debt levels. The financial crisis. Trade wars and protectionist policies. Natural disasters and public health crises. Political instability and conflicts. Technological disruptions and job displacement. Environmental disasters and climate change. Energy crises. Inadequate fiscal and monetary policies. Poorly managed fiscal and monetary policies of governments and central banks may lead to economic instability and collapse in 2024. Jeremy Grantham is the best investor in the world, and personally I will definitely listen to his opinion, but I don't ask much from you. Just subscribe to my YouTube channel and like this video, and share it with all the skeptics who believe that there will be no crisis.